Cash App is a popular mobile payment service that allows users to send and receive money. Understanding the tax implications of using Cash App is essential, especially as tax laws evolve. Personal versus business accounts. Personal accounts. Transactions made through personal Cash App accounts are generally considered non-taxable, as they are for personal, non-commercial purposes, such as splitting a dinner bill or gifting money to friends. These transactions are not reported to the IRS. Cash App. Business accounts. Designed for small business owners and entrepreneurs, Cash App for business accounts facilitate payments for goods and services. Payments received through these accounts are subject to tax reporting requirements. Cash App charges a fee of 2.75% per transaction for business accounts and issues a Form 1099-K when applicable. Cash App. Tax reporting thresholds. The IRS requires payment platforms like Cash App to report certain transactions. Previous threshold. Historically, the threshold for reporting was gross payments exceeding $20,000 and more than 200 transactions within a year. Plan changes. The American Rescue Plan of 2021 aimed to lower the reporting threshold to $600 for any number of transactions, starting with the 2022 tax year. However, on November 21, 2023, the IRS announced a delay in implementing this change. For the 2023 tax year, the previous threshold remains in effect. The IRS plans to set a $5,000 threshold for the 2024 tax year to phase in the new law. IRS. Receiving Form 1099-K. If your business account meets the reporting criteria, Cash App will provide a Form 1099-K by January 31st following the tax year. This form reports the gross amount of payment transactions received. You can access this form within the app under the Documents section in Settings. Cash App. State reporting requirements. Some states have lower reporting thresholds than the federal requirement. In such cases, Cash App may report amounts below the federal threshold to comply with state laws. Cash App. Tax filing considerations. Even if you don't receive a Form 1099-K, you're responsible for reporting all taxable income to the IRS. It's advisable to maintain detailed records of all transactions and consult a tax professional to ensure compliance with tax laws. Key takeaways. Personal transactions, generally non-taxable and not reported to the IRS. Business transactions, subject to tax reporting, Form 1099-K issued if thresholds are met. Reporting thresholds, $20,000 and 200 transactions for 2023, planned $5,000 threshold for 2024. State variations, be aware of state-specific reporting requirements. Staying informed about tax regulations related to payment apps like Cash App is crucial for accurate tax reporting and compliance.